In this video, we're going to talk about how to identify high probability setups using price action rules. What is a high probability setup? Well, it is a setup on a chart that has a higher chance of success if price action rules align and market context allows it. Now, high probability setups are quite rare. They don't form as often. This is why traders really need to be patient and to follow the plan and the rules of the strategy so that you're not taking setups that are iffy, that are way too aggressive. And what I need to do is I want to make sure all the price action rules align and the context also. So what is the context right now? Tell me. Well, I can see that we have downtrend working lower. That has a break and move to a new extreme following the trend line rule. Now, we don't have new low fully because we have micro double bottom. We don't have new low by one tick, but this is very tiny. One little tick makes no difference. So sellers are considering this attempt valid. Market is reversing higher. And notice I'm always looking for these channels because this is the nature of price action. There are always channels being present on the chart and they are not subjective, they're actually very objective. So we actually have price action created two-legged pullback and move to a new extreme, and price action is creating new high. Now what can I do also is I can measure the first move, copy it and project it where the buyers are trying to take the prices, because a lot of times these moves will get measured. So this is just one little tool that I use in price action to help me get an idea where the market is heading. So right now I can see price action keeps working higher. Okay, and notice how far the price action is heading. Okay, so at this point, it's getting a little bit stronger than I initially thought. So there's most likely a bigger uptrend being in play. So what I'm going to do, I'm going to connect the first two major swings and the third swing is confirming my channel. I'm going to put it at the top, but I can see that we have potential overshoot. Now, this is overbought territory. Overshoot is unnatural activity in the market. And what can I expect when I can see overshoot? Well, notice prices are very far away from EMA, which price action will not stay a long time far away from the EMA. Like this EMA acts as a magnet. So after overshoot, I expect stronger correction. Okay, you have first entry long, but I'm not really looking to buy just a first entry long, especially after overshoot. Okay, price action is correcting a little bit. We're bouncing at the top of the trend range, which is important because what structure right now am I trading? The main pattern right now, the main structure is a trend range. We have big move down and big move up. For this reason, you see me drawing the key level at the bottom and key level at the top. They're important major levels that you always want to look for because they may give you important information to work with. So I can see that the sellers are already selling at the top of the trend range. We have two-legged pullback down and you have a second entry long. Now, can we go long on this second entry long? Well, there was no trigger because there was no break above this bullish bar. Technically, we have a second entry long above this bearish bar, but we are buyers. We're not buying above bearish bar, we only buy above bullish bar. So there was no trigger, but had there been trigger hypothetically here, we still don't want to go long because there is no room to get out before this major key level, top of the trend range. And we had overshoot, so it's better to be patient, just wait. Okay, same thing here, I don't think you want to go long, no room to get out, way too sideways now, just be patient. Okay, now this is interesting because we have what is called a triple test. You can see one bottom, double bottom, triple bottom, which is indicating buyers are still coming to the market. The bias is still bullish. Okay, even though we're bouncing at the top, I'm not looking to sell. Why? Well, because the main bias is bullish. So my goal is just to find a deep enough pullback where I can buy a high probability setup. So this is a triple test. And the reason why I'm talking about this because notice this time you're buying much lower and there's more room to get out for your scalp. But the signal bar on this triple test is a bearish doji. So which is not the greatest signal bar, you know, especially in this consolidation. I don't think we can risk it. Signal bar is way too neutral. You would have preferred to have some small second entry long, room to get out that never formed, and market is continuing working lower. Okay, right now, what's going through your mind? Well, even though you see strong bearish pullback like this, that's not something to be worried about as of right now, because this uptrend still needs to get new extreme. Because we've been working hard from the very bottom all the way to the top. We've been working mostly above the EMA, supportive indicator, 21 bar. So I still expect new high to be formed for the buyers. So if anything, I'm looking for prices to push above EMA and confirm the bullish bias. And notice we have new low, first entry short, pullback, second entry short. Remember, main trend is still up. The trend line rule says we still expect new high. So even though this is a big range, you still expect, notice break, new low, we have a break, so I expect new high. The trend line rule, you still always are leaning towards creating the new extreme. So even though I see second entry short, I'm not even thinking about selling because I'm only looking to go long. So if you get a failed second entry short, it's going to be a great hype about this setup. And notice you have a failed second entry short, new low, first entry short, pullback, second entry short. We trigger one tick below this bar, failure, big bullish bar, confirming the momentum EMA is holding. This is a great hype about this setup because we expect new high. Stop loss goes one tick below the single bar. You're going to enter at the high and we have room to scalp out. So this is a great setup, worked for a scalp. And notice the price action continues working low. Okay, so we don't fully have new extreme, but because there's a main important resistance, it is very likely that the sellers just overwhelmed the market and this attempt for a new extreme was enough. Okay, because there's a chance for us to getting the new high and we have two-legged pullback down. So I'm not really looking to sell just yet because we have noticed first leg down, second leg down, there's some small support. So when I'm watching this, I'm still leaning more bullish. I'm rather neutral, but there's still a chance we're going to make a new high, especially after this two-legged pullback. So I'm just waiting. Okay, I would need to see push above EMA for me to go long, and this is not happening. Okay, and price action is proving me otherwise, and we're trading lower. Okay, so I'm adapting. At this point, I'm going to go back and reanalyze this structure. It is exactly as we thought, that this resistance has so many confirmations, and the main structure is a trend range. So this attempt for a new high, that's enough for bulls. And right now, the momentum is to the downside. And what does it mean? Since momentum is to the downside, I'm once again going to look for some channel. Because these candles on a chart, they're never working without a channel. There's always a reason to movement of these prices. And your goal as a trader is to be patient enough and to have a lot of screen time to understand the language of price action, because it is telling you, it is communicating with you, and you want to understand it, but it takes time. So right now we can see that the price action is working lower. I'm thinking more bearish. Okay, and price action once again is overshooting the channel. So I'm gonna mark it as overshoot. We have quite a few overshoots lately, and one thing that can help you distinguish this as overshoot, it's that it is so erratic, violent, and spiky. Notice how steep this last part of the trend is. This is 90-degree angle, very far away from EMA. You know, if it's more gradual, then you can treat it as just a wider channel. Once it's such a spike down, you're better off always, when you're in doubts, to be treating this as overshoot, because at this point you expect a little bit stronger bullish correction. So if there's going to be a second entry short at the EMA, you cannot take it. There is none regardless, which is good. You're just observing price action working higher. And notice price action is reacting exactly as we talked about. And we have break here, the overshoot, and we can get measured break to the other side. Very common in price action. And once we have overshoot, even though overshoot may lead to reversal, that is not what's happening most of the time. Okay, most of the time overshoot will just break the channel and you still follow the main trend, the big one that has overshoot. So once I'm watching this, I'm still expecting new extreme, but I cannot just sell randomly while we're above the EMA and the uptrend is in play. I would like to see some push below EMA and get a failed second entry long. Okay, we have a new high, first entry long, second entry long, failure. So here we have a failed second entry long, but the failed second entry long is above EMA. And since this uptrend may get new high, I cannot sell just yet. I need to see push below EMA. And you can see, I'm reading the price action. You can see so far we have only one high probability setup, but it is okay. This is why we are trading the 2000 tick chart, because it is fast, so we don't have to wait too much, because if you trade higher time frame, you may wait a long time for a good setup. Never be too impatient. It's okay. High probability setups are going to come, but we want to have the bias aligned, the proper key entry point, and the setup needs to form correctly. So I get nothing right now. Price action is working lower. Okay. So we expect truly new extreme according to trendline rule, which is great. So the bias is bearish. I expect new low for the downtrend. I have a second entry short, which would be two-legged pullback, high probability setup, but it's not at the EMA. It's not the key entry point. I cannot take. Far away from the EMA. You may get trapped, not interested. Okay, we're correct. I'm going to redraw the short and uptrend. Break. Okay, now I can see that prices are correcting to the EMA. And more importantly, if you are experienced trader, you can already see that there is some price level getting rejected here. So there's, just like here, you can see we identify triple test, triple bottom. I can see basically the same thing. I can see some reactions here, stims at the top. Sellers are coming to the market. And notice what I have. New low, first entry short, pullback, second entry short at two key entry points. Not just one, but two. because I have the EMA and I also have the triple test. So I have 2 key entry points. This bar looked very bullish, tick 1 tick higher, and a split second reversed down. So the momentum was quick, and this is a great high probability setup because the context aligns, it's bearish. Price action rules tell me that we need to get new low, and we are at the key entry point, and it is a 2-legged pullback high probability setup at 2 key entry points. So the great high probability setup, and market created the push to new extreme. Okay, so my goal is just to identify the bias, identify the main channel, and just look for the right place where the correction phase will end. And this is the right place where the correction phase will end. So what I have to do now is I'm going to mark new low. I actually took this setup myself. And since the downtrend on the left reached new extreme, this means, according to rules, I'm pausing my shorts. We may continue working lower. That's okay. I'm going to miss it. And I'm not going to be frustrated, flustered, or anything. I'm just going to follow the rules, be patient, because we may get stronger correction or reversal after new low. So notice you have a new low, first entry short, second entry short, but I cannot take it because the rules are right now different. This downtrend already has a break, move to a new extreme. You can see this low is lower than this low right here. That was while the channel was in play. So new low was made, and this is horrible inside bar anyway, so you don't want to take it, but that doesn't matter. The main context is the most important. Okay, so we have uptrend working higher. Something like this. Okay, notice what is happening. I can see that the exponential moving average is flattening, and we're starting to have a lot of price swings up and down, because right now I have to ask myself, okay, what is the bias? And I'm going to look at the chart and I'm going to see, okay, you're breaking low, so I'm not too excited to sell, but at the same time, there's no sign of bullish structure just yet. So I don't really want to go long, but I don't really want to sell. Let me just find some shortened price action. So the best thing is to locate this small trend range. I'm going to copy it, put it at the top. So this is pretty good. Uptrend working higher break. We have a new extreme. So I'm going to mark my new high. We have a little fell breakout here, but doji signal bar, you know, not that clear. You can see that price action works in pairs of two. So you have first leg up, break, second leg up. So it makes sense. It's just a signal bar was a little bit sketchy overall. Too many stems. You are expecting a lower high, confirmation of failed breakout, or you're expecting failed second entry long below the EMA. Because you're right now adapting to brand new rules, okay? You're playing the trend range. So you expect for prices to go back down, uptrend played out, and you trade it down overall. So everything is more bearish, everything played out bullish. Okay, can we get some pullback? And we can't get a single pullback. So that happens. Normally, a lot of times there's going to be some lower high, failed second entry long. This time we didn't get anything. It's just part of trading. I'm just observing the price action, letting it do its thing. Okay, we bounce at the bottom of the low of the day. This is why it's important to mark these important key levels, because this is giving you information that you need to pause looking to sell right now. Okay, this downtrend has a break new low. Plus, you're at the main support, so you're not really looking to sell. In fact, since all downtrends played out, I expect stronger bullish momentum because we're bouncing at the support. Okay, remember, just like at the main resistance, the sellers overwhelmed the market. At the main low of the day support, you expect influx of buyers. Okay, we have a new low, first entry short, second entry short failure, which would be reversal pattern headed formed above the EMA, but we closed below, and even this bar closed below the EMA, so it feels a little bit too aggressive, because we can still see that every major high is lower and lower than the previous one. So there is still some bearish bias present. You know, this is way too aggressive. You really wanted to see it above EMA. Okay, now you have a break new extreme. And what am I expecting now? Notice this right here looks similar to this. And because this uptrend played out with the break new high, and we have overall bearish bias because we keep making lower highs and low lows, I'm expecting a failed second entry long because I expect second entry long bulls to get trapped. Why? Because break a new high already formed, so there's no channel for the bulls, and we are trending lower. I can draw also potentially some spike in a channel like this, which can give you spike in a channel and overall bearish bias. But you don't really need a channel. I wasn't playing that channel because I can see that there's some bearish imbalance, just lower highs every single time. You can see every single time lower highs and every single time lower lows. Excuse me, lower lows here, lower highs at the top. So we have a new high, first entry long, second entry long failure. And I actually took this setup, filled second entry long, but I took it on engulfing because all the bulls got trapped and don't really want to take it once this bar forms because this is way too big of a bar. But if you're a more advanced trader, you can take a failed second entry long on engulfing, which means it ticked high, reverse down, and I dropped my order after it broke below this bullish bar. Okay, it was good for a scalp. And notice now we have new low, first entry short, second entry short. Which when I was watching this live, I made a mistake. I didn't take the second entry short because it was too... It felt too sideways. Notice the EMA is very flat. You have a lot of price swings up and down, and you're starting to have some small support. And this bull bar is so big that a lot of times I got trapped here. But because there's overwhelming bearish bias, and this downtrend still needs to get new extreme, you know, this is not a bad setup. Notice new low, first entry short, second entry short. So once again, the signal bar is so nice that I can definitely see to take it. I should have pulled the trigger here as well, but I was a little bit afraid. This is just too sideways and this big bullish bar, but the overall bearish bias was just way too strong. So you can definitely take it. Okay, price action, break new low. So which means, once again, this is a weak downtrend right now. Okay, it is important for you to classify strength of a trend, and this downtrend is weak because it has broad corrections. It's basically looking like a trend range that is slightly tilted down. Okay, you can see the bullish corrections are long, which means when you're trading a weak downtrend, you really want to make sure you're selling at the high when the correction phase is ending, and you don't want to be selling too late here where the push phase ended, because you have, notice, correction phase, push phase, correction phase, push phase, correction phase, push phase. You have to avoid selling at the bottom of the push phase in weak downtrend. So you're not selling here, you're not selling here, you're not selling here. If anything, you want to sell somewhere here, ideally here, and ideally here. These are the places where you want to sell. This is where the correction phase is ending. So you only have first entry short, so no worry. You're not really selling regardless because just the first entry. But had there been a second entry short, you still want to avoid. Okay, price action is working hard. I'm going to redraw wide the channel because I'm expecting right now stronger correction. Okay, you have a second entry long, but you cannot go long above horrible bearish bar. Everything is too stacked, too sideways. Okay, uptrend has a break new high. Price action is right now very, very sideways. You can see EMA completely flat. We are struggling to break the support. So what I have to do is I'm going to identify the resistance again, because we are right now in a small trend range again. Typical in weak downtrend, just move down, trend range, move down, trend range. So uptrend played out with the break new high. I can even draw this secondary channel that has a break and attempt for new high, micro double top. So if anything, I'm looking to sell. I'm not really looking to go long at all, because this is a clearly a trend range, and in trend ranges you want to sell high. Okay, trend range here, so you want to sell high, buy low. So, you know, this is a second entry long failure, but a little bit too advanced. Okay, and now we have a new high, first entry long, pullback, second entry long failure. Now this is good. Why this is good? Because this is a second entry long that looks good, but there is no context to support it. All uptrends played out, and you're coming off the highs of the trend range. Now this signal bar didn't fully manage to close below the EMA, which would be easy for second entry long for even beginner trader, but more advanced trader already knows that the market is about to roll over. The resistance is holding, and I'm going to mark it definitely more advanced. Felt second entry long, new high, first entry long, second entry long. So hopefully why it makes sense. The bullish momentum is playing out, and still the trend is working lower. And now you even have lower high confirmation of this failed second entry long, new high, first entry long, second entry long failure. And now we have great bearish bar, lower high confirming it. So definitely you can consider taking this bar as well. Okay, now we have a small break, new low. And once again, here it is important. I'm going to zoom back because support is coming into play. So once again, you cannot be looking to sell once you're finding support at the main low of the day. The market is reversing to the upside. Okay, we have a small break, new extreme. I'm gonna extend the trend range. This was way big of a spike for me to sell. Okay, I don't think you can go long. Notice such a congestion, so sideways. There's small resistance here. We have a small break new high, but you know, you can't really sell because this was so steep. and you can't really go long because the context doesn't allow it. So I'm just being patient. You can't go long directly into these highs, so congested. Okay, price action is working over. I'm going to reset the count here. Can we get a failed second entry long? New high, first entry long. Pull back. Can we get a failed second entry long? We can't get failed second entry long, and we're already way above. And now it's getting too late. So I hope the lesson was helpful. I hope you had a decent trend day. You can see there's a spike and a channel working lower, but you don't really need the channel. Make sure you're observing the lower lows and lower highs every single time, and make sure you wait patiently for the high probability setup where you're not doubting the key entry point, you're not doubting the context, and the setup forms correctly. So I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.